And Wall Street continues to feel the effects of the debt ceiling debate. Joining us now is Brian Ullman, financial advisor with Ford Financial Group. Brian, how did the debt ceiling issue and the potential government shutdown impact the markets and the economy generally?
Well, I don't know that it had a major impact, even though you look at what's going on in headlines and you can kind of see what's gone on these last few days or even the last couple of weeks here in markets in September. And it's easy to draw a correlation that one's going on and affecting the other. But I think really investors have been kind of almost presuming that this bill was going to get passed and taken to the president to sign and that we were going to avoid some sort of government shutdown. So September tends to be a pretty volatile month for stocks. August and September tend to be volatile months for stocks. August was good. September has kind of been true to form and has not been good. And you can kind of choose your crisis of what's come here, whether it's a Chinese real estate company going under, debt ceiling issues and government shutdowns, earnings, taxes, interest rates, pick your crisis.
Yeah, I'm going to throw one more in there. What about the potential for tax increases? How does that weigh in with this whole debate?
Well, I think tax increases can weigh a little bit. I think really the devil's in the details here. And if we're seeing a major, specifically for investors, if we're seeing a big corporate tax increase, that could weigh on earnings. Because when we're investing in companies, for example, you're investing in how well they're going to do going forward. And if they're paying more money in taxes, then certainly that could hinder them a bit. But if we're looking at things, I think there's this expectation that we might see corporate taxes go up to, say, 25%. Which is even below the 28% that was floated by the president when he was running for office originally, and well below the 30-something% that we had before the tax cuts in 2017, and even before that, companies were doing well. So I think this modest tax increase shouldn't create too much of a drag on equities.
And you had mentioned that Chinese real estate company Evergrande. How does that have any impact on us here in the U.S. and the potential COVID recovery?
Right. Well, I don't know specifically if that's going to affect the COVID recovery. I think we have bigger issues, supply chain issues, inflation problems, things like that are going to come to bear. The thing with Evergrande is that there is this similarity to the issues that we faced here in this country in 2006 and 7 and 8. And so there are these echoes that I think have made some people nervous. But you have to remember that China is a much different country than the U.S., where the government can absorb pretty easily the losses by banks from lending to this company. And China certainly has a real estate issue on its hands. The real question with Evergrande is whether it's going to infect the rest of the world in terms of real estate. And at this point, that doesn't look like the case. And I think investors are operating under the presumption that it really will stay contained in China.
And Brian, what are you telling your investors? I imagine you've gotten a few text messages, phone calls, or emails.
Sure. Yeah, well, it's been a while since the market's dropped 5%, and that's just what we've done. On average, though, the market drops 5% at least 3 times a year. And so it's been a while since we've had volatility. And so it doesn't feel normal when you're used to opening your statement and having it be up every single month over month. And so we're going to need to get used to volatility again, I think, as we go forward. Interest rates rise, and we get not just post-COVID, but whatever the economy is going to look like post-COVID. And that's going to be a bit of a bumpy ride. We're going to need to get used to it. But it's important to remember when things go a little bit sour, this is really when you need to do the gut check and decide how aggressive or how conservatively you need to be invested, and work with your advisor to kind of calibrate that correctly.
Good tips, good advice. Thank you so much, Brian Ullman, financial advisor with Ford Financial Group. Thanks, Brian.
Thank you, Brian. Well, if you missed any part of this interview, you can go to our website for more information. It's your